The market is shifting. Stocks are unstable, real estate, there's volatility there. There's a lot of things that are going up and down, which is why I believe 2025 right now is a great time to be in private credit, private lending, hard money lending, however you want to package it up and say it. I think it's a great time right now. And that's why I'm really glad that my business has started and growing in this time and in this time period. And I'm going to give you guys a few reasons why. Number one is that private lending gives you control and predictability. So you get to determine the LTV that you will lend at, the types of deals that you will fund. I think that's really important because I'm able to respond to the market in real time. If I'm feeling a little scared about things, I'm going to do a loan with a lower LTV. If it's a really good operator and they have a ton of cash and good credit and all that, maybe I'll go a little bit higher. But if we go into war or things are happening, the presidency, the tariffs, all these different things, I can move and scale in real time within the lending and still get high double-digit returns on my capital. So that's something that I appreciate. I have control and I have flexibility. Now, that's something that stocks, that's something that equity positions don't always provide you, even within real estate. You might be stuck more or less, and that's what's happening a lot in commercial real estate right now. Interest rates run up, they're way higher, way longer than they anticipated, and they're stuck in deals, and they're having to refinance or turn in the keys, and it becomes extremely problematic for a lot of people. So that's one great reason why I think private credit is a stronger position right now than equity. Another one is the macro environment is pushing capital to private credit. So what I mean by that is equity is getting riskier. There's a lot of risk inside of equity today. So you got to be mindful and careful of that in saying, okay, like if things are a little more volatile, if interest rates are up, if all this is going on, do I want to take this risk for this return? Is the return high enough to justify the risk? And a lot of people are saying no to that. So that's why you're seeing a lot more wealthy individuals and hedge funds and private institutions that are putting more money into private credit right now. So the last thing is distress equals opportunity for strategic lenders. So now you're dealing with all this distress in the single family market and multifamily, all kinds of commercial within businesses. So with that, they need an infusion of capital. So for strategic lenders who can control and dictate their own terms, they are able to be in a power position to provide loans to businesses, to real estate investors, whether it's single family or commercial in some kind, and they get to set the terms based on their risk profile and what they believe is a good loan to provide. So that puts you in a really strong position because you can take advantage of the distressed situation by being the bank, essentially, for these businesses, for this real estate. So I think those are the three reasons why more and more people need to be looking at private credit for a vehicle in 2025 and beyond. And not to mention just the cash flow. So while all this movement is happening, having a place to place money where you're getting consistent income is a very strong place to be. So that's why I'm putting my money in there. I'm not telling you that you have to, but I believe it is a very powerful place to put your money. And I see that many high wealth individuals are doing the same. So I wanted to share what I'm doing, why I'm reallocating some of my real estate into private credit, and why I think you should too. But that's just my 2 cents. Do what you feel like is best for you.